Hey guys, it's Hannah Pride. I work here in the UAE helping you build portfolios and double your money. I'm going to be building this YouTube channel to break down investments from top to bottom, outlining where the appreciation is coming from, breaking down the maths to make it simple so you understand what you're actually investing in. So come here and follow along. Hey guys, and welcome to our first market breakdown and review of the Emaar Oasis. This is our first month that we've reviewed the whole of the Emaar Oasis to see where the appreciation is coming from, to understand the market and to understand how your investment's either performing or what you should invest in. Palmiera, over the last 6 months in 2025, there was 22 transactions. The median price was 11.5 million, which is a 9% growth. However, I do know over December, we have seen a lot of contract Fs being signed and sealed. So I expect next month this to be even higher. This is great because people were investing in Palmiera around the 8 million mark to be reselling at that median price point at 11.5. They've paid, let's say, 50 to 60% down. They've been making a 50% return on equity, which just shows the performance you get when you're a phase one investor into Emaar. The median price right now is 1,280 a square foot. Really strong for Emaar, but I do think we're going to see a much bigger jump next month as people look here for end use properties. Palmiera now is 75% complete and 10 months ahead of schedule. Some people are loving it, some people are hating it. However, I think all of the distressed sales or people that were selling close to OP are now gone, and the people that have got the units have purchased as an investment, an end use, or it's signature owners that could always afford the 8 million regardless. This is one really to watch. The highest transaction 5-bed was 16 million, which is fantastic considering these were purchased at either 10 million or 14 million, depending where they were. I personally think Oasis has still got tremendous growth within it. When you break that down to that little gaff, which is in front of it, again, probably 5 years off completion, they're already transacting at 2,500 a square foot. That's another 100% jump of what's currently transacting in Palmiera now. Let's take a look at Mirage. Mirage hasn't seen as many transactions as Palmiera, however, it isn't as close as handover. With only 16 transactions, a lot of these were actually close to OP. Why has this happened? Palmiera are larger, 12,000 square foot and above, starting price was around 15 million. Because Emaar are 5 months ahead of schedule, payments are also ahead of schedule. Now, this has meant some people have forecasted their budget, but Emaar being ahead of schedule has put them out of play, allowing them or making them want to sell properties at OP or close to. This does not mean the community is distressed, it just means individuals are distressed. Back then, we didn't have as many launches. There was 212 launches alone in 2025. There was scarcity and we had the Russian war. People were moving to Dubai, looking for properties and just buying something they liked off plan, happy to pay a premium, even if they were waiting 2 years. However, now with there being so many launches, people would rather wait until closer to handover and mortgage the remaining amount, because that's something to really understand. 3 years ago when this was launched, or 2 years ago when this was launched, the market then was a 70-30 mortgage ratio. Right now it's sitting at around 60-40 of people taking mortgages. That shows that more and more Western people are coming here taking mortgages rather than being cash buyers, which again shifting the market. People would rather leverage, rather buy something direct from the developer with the lower payment plan than paying 80% to buy a property that's still not ready for 2 years. Think of that and always understand it. Now when you invest in off plan, always forecast that you can pay at least to 6 months before handover, or you could end up in trouble. It happens. The median price has gone down a little, but as I said, that is due to it being ahead of schedule. It's not a bad thing. It's actually quite good. Someone else has picked up a bloody fantastic deal and they will get the run. I always advise my investors to buy phase 1 to phase 3 because we know, especially within a community like Emaar, that there is going to be multiple phases. Right now we're sitting on phase 6 or 7, I think it is, and we've still got at least 1,700 units still to come. We know buying in phase 1, 2 or 3 like Mirage, Palmiera, La Vita, you are an early investor and have to make money because of the economics of buying with a master developer. They control the market, They control the price per square foot. Profits right now aren't as large as Mirage. Personally, I think the lateral end of this year, early next year, we're going to see a big jump in Mirage because it's going to be a closer handover date. They've officially hit the 50% completion mark, meaning people in Mirage have now paid 50% towards their property. If you are looking for a secondary purchase, consider that. You'll be buying in Mirage, although phase 2 and phenomenally priced. These were launched at, let's say, 50 million. You're required to pay 7.5 million plus 7% transfer fees. People don't have that money, but if you do, I would definitely grab up a deal. Now, these are the only 2 of the 6 I've broken down right now because the other developments so far haven't seen any secondary sales. They've all been direct from the developer. Last month, we did get 2 from Address, but they were OP, so it wasn't really anything to report. By next month, or by at least the end of Q1, we're going to see a lot more transactions in the Oasis. So follow along. If you are looking to invest, if you do want to keep up with the market, understand how your product is performing, understand the macro factors which are adding appreciation to your product, I'll keep you updated.